We're back already, huh? Let's see if we can get some people tuning in to the live. We are on election night, so I don't imagine it's going to be all that busy. Might be, though. You never know, I guess. Tough to say. Guess we'll find out. I don't see anybody on here yet, so let's hang on a minute. See who shows up. Well, it's funny. I do this on a bunch of channels, and on TikTok, it's the funniest. You have to be like, do I need these? Well, can't really see who's. Yeah, I kind of need them. It's bright though, huh? Really shines off my glasses. Let me take them off for a minute anyway. It's funny on TikTok, man. You're gonna be doing some goofy shit to keep people's attention. Like you have to do goofy stuff. I mean, that's why on it, like the people are like crazy hair and crazy nails and stuff. TikTok's a trip, man. There is some great stuff that can be found on TikTok. But you have to look like a nut sort of just to keep someone's attention. It's so funny because the scrolling's so quick. So it's like, oh, who's this? Who's this? Who's this? Who's this? And if you don't appeal kind of immediately, they're out of there. I'm going to start talking. If you have any questions, I am here for interaction. Like that's the point of this whole thing. That's why I go live is for interaction. So let's go ahead and get started with some the topic of conversation. I see no one's on yet. I'm gonna go anyway. I'm gonna talk about Monte Carlo simulation. You know what? I'm gonna keep these off with this light. It's just too much. I'm gonna talk about Monte Carlo simulation, what it is, why you need to do it. So online, there's just so much conversation around what investments to choose, right? Like, do I buy this? Do I sell that? When do I buy this? When do I sell that? Everybody wants to know all the details of the investment process, and everybody skips one of the most important processes that there is, and that's the financial planning aspect of it. If you don't have a solid financial plan, and I'm going to explain what a solid financial plan is. If you don't have a solid financial plan, I am not 100% certain as to why you are even looking at investments, because you will screw your investments up every time your personal financial life gets out of whack. I mean, I promise you, anybody who's 40 plus will tell you this story for sure. They thought that they were going to, they had this money, 50 grand, 100 grand. They rolled it over from a 401k. They were going to learn how to trade. They were going to knock the cover off the ball. They were going to do amazing. And most of them probably lost half of it pretty darn quick. And then with the other half, all of a sudden some life event popped up that they hadn't planned for appropriately. And now they have to spend the other 50 and they go away saying, that just wasn't for me. I didn't have the time. I didn't have enough money. I didn't learn enough, so on and so forth. The truth is, whether they lost that money initially or not, once they had to spend that 50,000 because they didn't have a proper financial plan, because they hadn't planned for life's unexpected events, as soon as they had to do that, it was already over. Because once an investment account, I don't care how it takes the hit. Most people that learn to trade and learn to invest, guys like myself, been doing this professionally for 25 years. I have lost my entire account 3 times over just to become good. Not a master, good. My education in finance, specifically investments, learning how to invest in the stock market, that education cost me close to 100 grand. And how was that learned? The way you learn anything worth learning in this life, the hard way. I lost the money. I blew up 3 times over. And let me tell you, that is not a hard thing to do. Very, very easy thing to do. Almost anyone that has tried can tell you that it is very easy to do. If I were you, I would stay away. I don't care that I'm on social media. If I were you, I would stay away from social media when it comes to, if you're following someone's trades, if you're following some guy's advice, I'm telling you right now, you are making a monstrous mistake. I don't care if he's talking to you live. I don't care what he claims he's doing. I am telling you that I see so many guys online talking about 70 and 80% win rates. They say they're day traders, they're high frequency. Let me tell you a secret about high frequency day traders. They're right about 54% of the time. That means they're wrong 46% of the time. Now, that's the real thing. That's the real deal. Those guys are the real thing, right? And they are wrong 46% of the time. You got some guy telling you he's right 80% of the time. Give me a break. That's outrageous. So let's talk about day trading. Let's talk about what it takes to be a day trader. All right. Well, I spent 15 years as a financial advisor. Um, you would probably consider that a conservative kind of job, but it wasn't. Not for me anyway. It certainly wasn't for me. I wasn't that kind of guy. I wanted to learn about investments right away. Like I really wanted to learn like how the market moves. How can I move with it? How do you avoid bear markets? I saw other people doing it, so I knew that it was possible. And so I jumped in, and the first thing I started learning about was VSA. That's volume spread analysis. That's the spread between price and volume. Okay. So, how volume is behaving and how price is behaving gives you an answer as to how the market should react. And like, why does it work that way? Like, why does the market work that way? Hey, if you're watching right now, make sure that you're liking that screen. Hit that like button, man. Otherwise, I won't be on very long. Yeah, but hit that like button. Otherwise, like I'm saying, I will not be on here very long. So anyway, that's for you guys on TikTok. I'll just turn TikTok off and I'll stay on Twitter and LinkedIn, and I think I'm on Facebook too. So anyway, I'm going in. I want to learn how to do it. So the first thing I do is VSA, volume spread analysis. I can tell you that volume spread analysis for me is the baseline of everything that I do, even today. That is the first thing I look at. The first thing I care about is volume. For those of you on TikTok who don't know why volume matters so much, I want you to go look at my most recent post on TikTok. Go take a look. And it says, I forget what I titled, but it's like, you think you can't spot stock market tops, or you can't spot market tops. And it shows how easily the Dow's top was identifiable in 2021. It was so easy, and it was right before a 25% drop. The S&P and the NASDAQ were just as easy, believe me. I remember that top so well. It was a piece of cake. People say you can't do it. Well, I made that post so that those of you that are on TikTok could go take a look. For those of you that are on Twitter, you're on LinkedIn, or you're on Facebook or whatever, let me show you how easy that top was to identify. I believe I kept it up. Yeah, there it is right there. See that volume? This is why everything I do is around volume. If you're on TikTok, make sure you look at my look at my most recent post. If you're on the other channels, you see that volume right there? Why does that volume at? This is a daily chart, okay? Going from September of 2021, it's actually going from closer to July of 2021 to today. Okay, to today in 2024. And why does this volume matter so much? Why is this volume so big? Why does volume that size matter? Well, I can tell you exactly why it matters, because for institutional money to sell, for them to get out of the way of a bear market, they're going to have to place a lot of trades. And that's what you see right there. You're looking at a lot of trades placed all at one time in a given. This is a weekly chart. I apologize. There is a day that stands out, but I have the weekly chart up right now, all in this week. And when you see a bar like that at a high price after a very long rally, this is selling. They're out of there, and all you have to do is follow. I know you want to believe that it's harder than that. I know that you do, but as far as now, this is for you intermediate term and long-term traders, okay? For you day traders, it's significantly different than that. It's not quite that easy, right? Because you're interested on daily movements. And let me tell you something. I've day traded several times in my life. I can tell you it's not really for me. It's just not something that I enjoy. It's for me staring at the screen all day, evaluating the chart, going back and forth. My win rate is probably higher, I would say, than most day traders, because I'm not high frequency. But also, you need a significant amount of capital for day trading to truly be worth it. For it to be a scenario where you're not going to make more money elsewhere. And then, because, for example, let me give you an example. If you're day trading, you need to make, let's just say you need to make $500,000 a year. Like, no, actually, that's even crazy high. Let's not even go that high. Most professional traders are doing like 100, 120 a year. Some of them are doing 200. Your standouts do a hell of a lot more than that. But let's just run with like the high end of your day trade, right? And if you guys can see here, I just put up a QR code for vol signals. Vol signals is for me, if you're a day trader, you should be over there. Okay. What they talk about over there is the Greeks. They talk about the flows. They talk about how the market is moving on a day-to-day basis based on option pricing, based on positioning of market makers. So for your day-to-day flows, that's why I put this up. Learn the Greeks and understand the daily flows. Vol Signals is a great place to go. I happen to know who runs the business, and amazing, intelligent, insanely intelligent in that arena, knows so much. He's a wealth of knowledge. You need to check him out. And I put that up for you day traders because there should be some interest in that day trading. There really, really should. You should care. So I put that up for you so that you could click on that and take a look yourself. Use the code Derek10, capital Derek, DEREK 10. That'll give you 10% off anything you do over there at Vol Signals. Again, Derek 10. There's the QR code. Go have a look. Day traders. What type of personality is a day trader? Well, I can tell you the type of personality that's a trader. This is kind of a fun story of my own. This is a fun story for me of like my life. And so I'm a trader. Let me give you the idea of the type of personality you're going to have if you're going to be a trader. If you're going to be someone that puts your own money at risk every day, and then I would assume you probably have some clients as well. This is me in my mid 20s, my late 20s. I'm living in San Diego, California. I was working at Merrill Lynch, but I had opened up my own shop, right? Me, my wife, one of my very, very good friends, we're out, we're having a great time, we're tossing them back. We're at the after hours place. It's like 11 o'clock. We're like, what are we going to do, you know? And we were a wild bunch, right? We're a wild bunch, and we're like, what are we gonna do? You know, it's Friday night. You know, let's do something fun. And somebody's like, let's go sailing, and we love to sail. Like all of us, my friend and I, we were members down at the club, and we would race. He was like a licensed sailor, and so like we would race his boat. It was me and one of his other friends, and we were kind of the labor, right? And so we're drinking. And so he's like, hey, man, let's go down to the yacht club. I go, but it isn't late. It's like 11 o'clock. We're never going to get into like the yacht club to go sailing. And he's like, no, he goes, we just go around the fence. Like, we'll figure out a way in. We'll take one of the boats out, you know, and we'll bring it back and they'll never know. So listen, here's the thing. That's exactly what we did. We got down there to the harbor because we were up north of San Diego. And there was like this big fence, and like my wife and him were, how are we going to get over the fence? And blah, blah, blah. They turned around. This fence like 30 foot tall. They turn around. I'm climbing over the fence. I'm going over this fence. I go over this thing and like had, you know, the door lock or whatever. I go over this fence. I go, and then I'm by the, they're whispering. I open up the door to let them in. And like they're looking at me and like they can't believe that I just like went over this fence. We go in. Anyway, we took the boat out on the bay. We had a great time. We actually went over into the gas lamp district, had some pizza. I saw some cops at it's a pizza shop that everybody kind of goes to after like the night's coming to an end. There were some cops there, and I was telling them all, we're pirates, we stole a boat. They're thinking like, yeah, right, you idiot, you know, go away. Like I said, I'm in like my mid-20s at this point. And they're like, yeah, like go away. They're laughing. And everybody my wife and my friends are going, what are you doing? What are you doing? And I'm like, yeah, we're pirates. Arg. And so then we take the boat back. And, you know, obviously no harm, no foul. Innocent fun. Even if the club had found out, most of what would have happened, we'd had to give him a credit card for taking the boat out. But that's not really the point. The point is, for you out there that think that you want to be a trader, that's one personality. You're the kind of person that is okay with taking risks, right? Like you are a risk taker. You have a big, large risk appetite. There's another kind though. And this kind, which I also happen to be, that was my mid-20s. I was a wild guy back then. I calmed down significantly getting into my 30s. But Not the point either. There's a second kind of guy, and he's like the engineer type, right? He's your methodical, A, B, C, D, shoot, C didn't work, D goes to H, H, we got to circle back to B. He is methodical. And those methodical guys, they do great as well. But you still have to have a risk appetite because it doesn't matter how methodical you are. There is a probability of loss. And believe me, that probability comes to fruition. Oh, it does. That probability will come to fruition. You will lose no matter how good you are. It's just the name of the game. That is the name of the game in day trading. And well, what I do, it can easily be done in day trading. What I teach can be done in day trading. What I tell folks is I'm the kind of person that I work in finance obviously for 25 years, right? And I avoid big bear markets. That's what I do. I don't participate in big bear markets. So why don't I do that? Well, if you can average about 20% per year, which is really just avoiding large bear markets, you will flip your money every 3.5 years. Okay. So every 3.5 years, you double your money. So if you're doubling your money, so every 3.5 years, so you're making 20%, you're doubling your money, right? And right now you have 200 grand. Okay. You are, doesn't even matter. You don't have to be that young. Say you're 40 years old every 3.5 years. So we'll say you're at 60. All right. You have $200,000 right now. So by the time you are 60, you're gonna have what? You're gonna have about 6 flips, right? 3.5, 3.5. So your money's going to roll 6 times. So you're going to go from 200 to 400, 400 to 800, 800 to 1.6, 1.6 to 3.2, 3.2 to 6.4, 6.4 to 12.8 by avoiding bear markets and never adding to the $200,000 you have right now. You worked the whole time. You weren't stressed out every time the market fluctuated. You weren't staring at charts all day. You weren't bound to your desk. You weren't in a dead panic all the time. And I assure you, that is what day trading is like. That is why day trading has been outsourced to machines because it burns humans out. Humans have a hard time doing it over the long term. So you have $200,000 at 40 years old, and you can turn it into what I just say, 12.8 or 12.6 by the time you're 60 by simply avoiding bear markets, which are pretty darn easy to identify. You're going to tell me you're not going to do that? Of course you are. Of course you are. So for those of you out there right now that are talking about or considering, what I don't know if I want to put it that way, what you're considering, but what you're not sure where you belong, right? Like where do I belong in all of this? Like what should I, where should I be as far as like, am I a day trader? Am I a long-term investor? Excuse me one second, I got to pull something up here. Am I a long-term investor? Am I a swing trader? What does all that mean? Well, here's the first thing. The first thing you have to realize is what a lot of that means is, and what a lot of that is based on is your personality. So if you're still asking that question, then you haven't worked with anyone enough. You haven't worked with anyone enough to know what type of trader you are, what type of investor you are, or you haven't traded or invested yet. Now, what I can tell you is that before you know, hey, should I be a day trader or should I be a long-term investor? The first thing you have to ask yourself is, does it interest you to sit in front of a computer all day, every day? First question is, does that interest you? Because to sit there and what I mean by that is to sit there and break down markets all day, and then you're going in and out of markets, right? You have some wins, you have some losses, but you sit there all day. Hold on one second here. I have to respond to someone who's asking me a question. Okay. Apologies here. Give me one second. So the first thing you need to know is your personality. And what I can tell you is very, 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 very few people are cut out to actually day trade, like especially over the long term. especially over the long term. Okay. Because over the long term, you're going to have to take You're going to have gains. You're going to have gains, plenty of gains, but you're going to have lots of losses too. And I have to tell you, that just isn't cut. That's just not cut out for everyone. It's just not cut out for everyone. I know even me, I've been in finance my entire life. And let me tell you something, I don't like doing it. I tried it for the 80th time 3 months ago. I'm like, okay, maybe this time I'll like it. I don't. And I don't. So the place you have to start is a solid financial plan. The first thing you need to know is, what type of financial situation am I sitting in? Will I get to the goals that I want to get to? So, for example, if you can make 10% a year in an asset allocation model, and that makes all of your dreams come true, why would you do anything but that? Why would you take risk that you don't need to take? You're going to be a happy person at 10% a year. Why would you care what 20% a year does? Why would you care what 40% a year does? Well, what is the difference? What does that matter to you? But then again, if you go in and you set up a financial plan, and then you're only like you set up for 10%, and then you go and you look at the Monte Carlo simulation, which I'm going to talk about in 1 second, what a Monte Carlo simulation is. But you look at the Monte Carlo simulation and you literally have a fail rate of 70% of the time. Well, 10% isn't going to cut it. So 10% doesn't cut it. So then you go back, you say, hey, do I need to add to my savings? Oh, I can't add to my savings. This is the job I have. This is all the money that I make. So I can't add to the savings profile. Then you go, okay, well, I can't add to the savings profile. Is there anything I can cut out of my life that would help? And maybe you just say, hey, look, I'm going to take one less vacation a year. Okay. Oh, that makes it work. But then maybe you don't even have any vacations put in. Like, you have none plugged in. So then what you're going to have to do is you're going to say, well, 10% isn't working. I'm one of those people that's going to have to figure out how I can make 15 to 20%, because at 15%, I have a 70% success rate. And at 20% in returns per year, I have a 95% chance of success. So I can be, but this is what a financial plan does for you. It lets you know, okay, look, here I am. So we'll like, hypothetically, it's me, So you go, here's Derek Miller. He's walked in, he's taking a look. He wants to set up a financial plan. He has 2 kids, he has a wife. He wants to retire in 20 years. Right now, he has $150,000 to invest. He plans on saving $10,000 a year. That $10,000 is based on a vacation, a new car every 6 years, so on and so forth. Okay. You go through, and what a Monte Carlo simulation does is it takes the stock market. So we talked a lot about the rate of return of a stock market here, right? So it takes the stock market and the rates of return and it mixes it up. So if you're not familiar, a bull market means that the stock prices are going up. A bear market means that stock prices are coming down. Okay. So what it's going to do is it's going to take Derek's life, it's going to multiply it by 1,000. And then it's going to say, okay, in Derek's first life, he starts life with a bull market that lasts 15 years. Then he has a bear market that lasts 3 years and a flat market that lasts 20. He finishes up with a big 30-year bear market. In his second life, he starts the bear market, has a small bull market, goes flat, finishes with a bull market. So the program does this over 1,000 of my lifetimes. And then, so what happens when it turns out I have a success rate of 70%? Now, some people would tell you that if Monte Carlo gave you a success rate of 70%, that's good. You should be happy. That is success, and you should be stoked on that. That's what they would tell you, okay? What I would tell you is, me, the way I am, I would not accept anything under 85%. So the first thing I'm going to do is I'm going to go back and I'm going to say, okay, well, can I change my income? Can I earn more money? At the moment, no, I can't. All right. So can I get a new car every 7 years instead of 5? All right, let's see what that does. If I wait 7 years instead of 5, what if I run it till it blows up? I let it go 10, 12 years. If you have a Forerunner, last the rest of your life, but you know what I mean? So try to adjust that. Then maybe I adjust the vacations. Then, I want to pay all of my kids' college. Let's just say I'll pay for 50% of my kids' college. Hey, anybody on TikTok, make sure you're hitting that like button if you're enjoying this. I appreciate it. And so then none of that works. So I look and none of that stuff does it. It just doesn't get me the 85 I want to have. Well, now I go in and I say, okay, well, I need to increase my percent return. How can I do that? So I expose myself to some more stocks. That doesn't do the trick. Then the stock market exposure, that doesn't help. And so some more crypto, and that doesn't help. And so what I realized is, okay, I do actually have to take this to the next level. I'm going to have to spend a little money on education. I'm going to have to learn how to identify bear markets, and I'm going to have to learn how to avoid those bear markets, or I'm going to have to find someone who can do that. And maybe they have a service or something they can teach. So what I do for people is this. I do one-on-one training with people. So I teach them how to invest, how to set up their own investment plan. Most people don't realize if you're going to go in and invest your own money, you don't just go in and set up an asset allocation and then go to sleep, right? There are three pillars to any investment plan. That is risk management, cash management, cash management, and risk, cash, and investment management. Gosh, sorry, I've been on lives a lot today. So investment management, risk management, and cash management. What does that mean? How much cash you keep on hand, how much risk you take, and what investments are suitable for you. Okay. And there's only one way to really come up with that plan in a precise manner, and that's to work with someone like me. I do it for people. It's my one-on-one training session. And basically, I get to know you. I teach you how to read markets, and I get to read your behavior going through it. By the time all's said and done, you have an investment plan based on you, your personality, the type of trader you are. How can I do that? I've been doing this for 25 years. That's how I can do it. After 25 years and 15 years as a financial advisor and running my own financial advising firm, I can tell when I meet someone what type of person they are after I get to know them, obviously. Like, I'm not going to know in the first meeting who you are and what you're about, but that will come to me as time goes on. So that's what I do in my one-on-ones. But the first thing you have to do, and this is what I tell everyone. If you're working with a financial advisor, I know he's charging between 1% to 2% on your assets. That means however much money you have, he's charging you 1% to 2% per year on those assets. Okay. What he's going to do for that is he's going to do a financial plan for you, and he's going to set up asset allocation. You're going to pay that fee as long as you work with him. So as long as you work with him, that's how long you pay the fee. Okay. You work with him for 10 years, you're paying 1% to 2% on your assets for 10 years. So I built a course. It is 7 hours worth of video tutorials, step-by-step walkthroughs. It is a 70-page workbook. It has all the software for you to do a proper financial plan, Monte Carlo simulation, budgeting, tells you the history of Wall Street, why Wall Street was created, the reason it was created, and how it's utilized today. Then it takes you into the financial plan. You'll get a proper plan set up, one that will work. Then you step into the asset allocation. You'll learn how to set up an asset allocation model. And I'll walk you through how to set up an account you should have, IRA, Roth IRA, how to trade, how to transfer, and then how to auto rebalance your portfolio. All that comes to you for $500. Course so cheap that no one has an excuse not to do it. Well, Derek, I only have $1,000 to invest. You should take 500 of that and you should go buy that course. You can't do anything if you haven't done that first. Let me tell you something. I used to charge 2% per year to work with me. That was when I was with Maryland, Wells Fargo Advisors, and AG Edwards. 2% a year. That means everybody that had $1 million with me paid me $20,000 a year. They were paying for what I just told you about. That's what they paid me to do. That's what the money was for. Now, I was a more active investment manager. That's why I charged 2%, not 1%. But if I had only charged 1%, they would have paid me $10,000 a year for what I'm offering to you for $500. The exact same thing. There is no difference. For those of you that are on my Twitter or my LinkedIn, the QR code is right there. Click on it. It will take you to that particular course of mine. That course will feel like you are working directly with me. It is not a slideshow presentation with voiceover. It is actually me. It's a 70-page workbook. It's 7 hours of walkthrough tutorials. It's all the software you'll need for a proper Monte Carlo simulated financial plan, along with how to set up your asset allocation. Sell me your glasses. I can't sell you my glasses. I won't be able to see you telling me to sell you my glasses. B. Cruz. Because I said. That did say Cruz. See, and you want my glasses because I said. I can't give them to you. I just said your name was B. Cruz. Oh, figuratively. Right. Sell me your glasses. I'll sell you my glasses. Can you see what color trees behind me? No? Perfect. 20 bucks. Sold you my glasses. Because I said, right? No? Yes? I don't know. Or I could have even won up that really easily. Give me 20 bucks for my glasses. And if you can tell me the color of the tree behind me, I'll give you 1,000. I sold you my glass. I mean, I lost money, but that's not what you asked me for. So then you'd know the color of that tree, and I'd have sold the glasses. Of course, not it. But anyway, so that's my Invest Like a Pro course. Okay. The Invest Like a Pro course is there because first off, you can't do anything without it. It is the foundation of everything you will ever do. You cannot do anything without it. You shouldn't. Listen to me when I tell you this. You should not do anything if you don't have that set up for yourself. You just shouldn't do it, because any mistake you make in your personal financial life, if you're trying to invest, it will influence those investments. If you start to lose money over here, or your success rate drops and you don't have a plan on how to recover, you're going to screw up over here because you're going to start taking additional risk. You're just going to look, mistake after mistake will happen with your investments because you have an improper financial plan. Also, that actually brings me to another really, really good point. One of the great things you can use a financial plan for is actually monitoring your investments. So because I said, check this out, this will make sense. The way a financial plan can monitor your investments is really easy. We talked about the Monte Carlo simulation and how you're really, I mean, if you have an 85% success rate, that's about as high as it needs to be. But your investments are tied to that financial plan, right? So if your investments all of a sudden go like, bonkers, and all of a sudden, you expected this 10% rate of return, but you've been getting like 19% and it's over 3 years, and all of a sudden you have 100% probability of success, meaning you can't fail. What that tells you is you need to dial back your risk in your investments. Your investments have moved far too fast for that Monte Carlo simulation. Now, why does that matter? No, great. That means I can have more money. No, a Monte Carlo simulation is your life and the stock market played out 1,000 times. So if you take my life and the life of the stock market, you play it out 1,000 times, and you have all these variables in my life and all these variables in the stock market, and all of a sudden you hit a place where you go from 85% probability of success to 100% probability of success. What just happened is the stock market behaved so positively. There's so much risk on the table that you should dial back the risk in your portfolio to match your 85% probability of success in your financial plan. And guess what that will do for you every time? Every time the stock market goes parabolic, it starts to go straight up and everybody's screaming and jumping for joy, you will be selling instead of jumping in there with them. So if you're on TikTok right now, and because I said, in case this interests you, you can go to prometheaninvesting.com. If you go over to my profile, it's my website, and the Invest Like a Pro course, it's $500. I priced it that way so that anyone can afford it, so that everyone can have it. No one has an excuse not to buy that. If you are working with a financial advisor, if you are investing $50,000 right now, if you're investing $50,000 and you're paying a financial advisor, you're paying at least 1%. That means your break even is 1 year. Because 1% of 50,000 is 500. And you're going to pay that advisor for the rest of your life on what I'm offering you for $500. You can't beat it. And take it from someone who worked for Merrill Lynch, Wells Fargo Advisors, and ran my own firm. You won't find a higher quality product than what I'm giving you. And I'm giving it to you at a fraction of what you will pay for your entire life for someone else to do it for you. And you will be getting exactly what a financial advisor will do for you. In fact, you'll get more because you'll care more. You'll pay attention more. You'll have more concern. Why? It's your money. That's why. All right. All right. So thank everybody so much. Looks like viewership was really down this. I'm not 100% sure why, but I also had quite a few people click on my QR and they seem to be interested. If you are interested in day trading, it is vol all signals, VLsignals.com. Coupon code is Derek10, capital D, capital E, capital R, capital E, capital K, 10. Derek 10 is the coupon code, 2% off anything you do there. You learn the flows of the market. You learn how to read what's going on within the market on a daily basis. If you're looking at day trade, go over to Vol Signals. They have studies as well. Use the code Derek10, and you won't regret it. If you are looking to get started with your investing, my Invest Like a Pro is the place to start. If you already have a financial plan and you're ready to take it to the next level, reach out to me via my website or my email, dmiller@prometheaninvesting.com, and talk to me. We'll talk about what my one-on-ones cost and what I do for you. I can tell you this: it'll be the most value you will get for your money and your investment dollar anywhere. As far as being able to still work your job, right? You'll still be working your job. You'll still be saving money, but you'll learn to identify bear markets. You'll learn how to identify tops. You'll learn how to identify bottoms. And in fact, I do have some students that are thinking that they want to go to day trading. I have a one-on-one student right now, and I'm fairly certain that is what he's looking to do. And if he's looking to get there, I can show him how. There's no doubt about that. I know how to identify and show how to identify what institutional money is doing, how you follow that institutional money, how you increase your probability through risk management, through investment management, and through cash management, meaning you always have cash on hand if you need it. So if you're interested in that and my one-on-ones, prometheaninvesting.com, reach out to me, dmiller@prometheaninvesting.com. Let me see here. Oh, if you are not following me on Twitter, I do tend to give out a lot of information on Twitter. So it's Derek Invests. There is my email address, dmiller@prometheaninvesting.com. Thank you so much for joining me. If there's anything that you would like to hear about that I am not talking about, let me know. I am doing this to interact with you. I'm doing this to answer questions. So let me know. I will be back here probably in an hour or so, and I'm gonna do a couple more hours tonight, and then I'll be back tomorrow. I'm gonna establish some steadfast times that I come on to live here for a while. I'm gonna give this a try, and I'm gonna see how it goes. All right, thank you so much for joining me, and you all. I will be back here in probably an hour or so, maybe an hour and a half, and I'll see you soon.